In March 2025, a solar manufacturer in Germany quietly canceled its orders. A defense contractor in Virginia secretly added silver to its strategic reserve. 3 major Asian refineries stopped accepting new contracts. And in London, the world's oldest bullion dealer implemented purchase limits for the first time in 340 years. This isn't a prediction for tomorrow. This is happening right now. And if you don't understand what these signals mean, you are about to be blindsided by the largest industrial commodity crisis of the 21st century. We are witnessing the beginning of a global silver lockdown. In the next 12 minutes, I'm going to show you the 3-phase lockdown pattern that precedes every critical resource crisis in history. It is the exact same pattern that happened with oil in 1973, with rare earths in 2010, and with semiconductors in 2021. Phase 1, silent accumulation, where the smart money buys. Phase 2, export restrictions, where the borders close. Phase 3, price controls and rationing, where the market breaks. But here's the difference this time. With oil, the Saudis could just pump more. With chips, we could build more factories. With silver, there is no substitute. There is no workaround. You cannot cheat the periodic table. When the lockdown completes, entire industries, from solar to defense to electronics, will stop. The governments know this. That is why they are quietly hoarding while telling you everything is fine. In this video, I will show you the data they are hiding, why the paper price of silver is a lie, and exactly what happens to your portfolio when Phase 3 hits. But first, we need to look at Phase 1, because the biggest buyer in the world has suddenly gone dark. Phase 1 of a lockdown is always the same: silent accumulation. This is when governments and megacorporations act on information that you don't have. They don't issue press releases. They just start buying everything that isn't nailed down. And the most terrifying signal right now is coming from the East. In late 2023, China effectively stopped reporting transparent silver import data. Why does that matter? Because China processes 80% of the world's solar panels. When the country that consumes 20% of the global supply suddenly goes dark on its statistics, they aren't being forgetful. They are hiding the scale of their buying. They are draining the global market before the price spikes. Then look at India. In 2024, Indian silver imports hit a 38-year high. The media will tell you this is for jewelry and weddings. That is a lie. You don't import thousands of tons of industrial metal for necklaces during a recession. The Indian government has reclassified precious metals alongside military assets. They are building a war chest. Russia has done the same, diverting nearly 100% of its domestic silver production into state reserves. They aren't exporting an ounce, they are keeping it all. And here is the part that should make you angry. The United States, the supposed superpower, has zero. Nothing. We sold off our entire strategic silver stockpile between 2005 and 2015 to balance the budget. We bet on just-in-time delivery and infinite paper markets. China and Russia bet on physical control. We are entering a resource war completely naked. It's not just governments. Look at Tesla and First Solar. In 2024, they quietly signed long-term supply contracts directly with mines. They bypassed the public markets entirely. They know the shortage is coming, and they locked in their supply at fixed prices, leaving you to fight for scraps on the open market. This is the definition of insider information. They are acting. You are waiting. We are building this channel to be the antidote to that ignorance. We are racing to hit 1,000 subscribers by December 31st, 2025. If we hit that goal, I'm going to release the killer video, a script that exposes the next step the elites will take. Asset confiscation laws that are already written and waiting for a crisis. I'm afraid to upload it, but if we have 1,000 insiders, I will take the risk. So if you want to know how to protect what you own, hit that subscribe button right now. Now, let's look at why they are panicking. It comes down to a simple law of physics that no amount of money can fix. Here's why this crisis is different from anything else. Usually, whenever there is a shortage of a commodity, the free market fixes it. If the price of oil goes up, the Saudis turn on the pumps. If the price of corn goes up, farmers plant more acres. High prices create new supply. This is Economics 101. But silver breaks Economics 101. It suffers from a unique problem called the byproduct trap. 70% of the world's silver comes from mining other metals: zinc, lead, and copper. Geologically, silver is just the bonus that comes out of the dirt when you are digging for something else. This means the supply of silver is inelastic. If silver prices triple to $100 an ounce tomorrow, a copper mine isn't going to double its production. They can't. They are mining for copper. They won't flood the market with copper just to get a little extra silver. This means that unlike gold or oil, supply does not react to price. We could have a desperate global shortage, prices screaming higher, and zero new supply would come online because the base metal miners dictate the output. Furthermore, we are running out of the easy stuff. Ore grades, the amount of silver in a ton of rock, have been collapsing for decades. We are having to dig deeper, spend more energy, and crush more rock just to find the same amount of metal. And where does it go? Gold is hoarded. Almost every ounce of gold ever mined still sits in a vault somewhere. Silver is consumed. It is used in tiny amounts in iPhones, missiles, and bandages, and then it is thrown into a landfill. It is too expensive to recycle the tiny amounts in your phone. So, we are taking a finite, strategic element, digging it up at a great cost, and throwing it in the garbage. Meanwhile, governments have legally mandated the expansion of solar power, which requires massive amounts of silver paste. So we have mandated demand colliding with capped supply. That is not a market cycle. That is a mathematical wall. And when a market hits a wall, the only thing the government can do is close the gate. When supply is inelastic and demand is mandatory, we enter phase 2, export restrictions. This is the phase we are in right now. Governments stop trusting the free market to deliver what they need. Instead, they start viewing every ounce of silver leaving their borders as a threat to national security. Look at the precedent. In 2010, China restricted rare earth exports. Prices spiked 10x in 18 months. In 2013, Indonesia banned tin exports. Prices doubled. Now, look at silver. In late 2024, Mexico, the world's largest silver producer, quietly implemented export quotas. They didn't call it a ban, they called it resource management. But the effect is the same. The metal isn't leaving the country as fast as it used to. Peru has tightened mining regulations, slowing production exactly when the world needs it most. And the consumer nations are reacting. South Korea is a manufacturing giant. They need silver for chips and screens. In February 2025, 4 major South Korean banks stopped selling physical silver bars to retail investors. Why? Because the industrial giants, Samsung, LG, tapped them on the shoulder and said, "We need that metal for the factories." When banks stop selling to people to save metal for industry, the free market is officially dead. This forces us to ask a fundamental question. For 50 years, we have treated silver like a boring industrial commodity, like copper or aluminum. But if missiles don't fly without it, and solar panels don't work without it, is it really just a commodity? I want to know what you think. Is silver just an industrial metal that will fluctuate with the economy? Or has it become a strategic weapon that nations will fight wars over? Go to the comments and type metal or weapon. I suspect the Pentagon already knows the answer, because while the physical walls are going up, the financial markets are still pretending everything is normal. And that disconnect is about to cause a catastrophic break in the price. If there is a massive shortage, why hasn't the price exploded yet? Why is silver still trading at $30 or $40 when the math says it should be $300? Because the price you see on your screen is a lie. The global price of silver is not set by the physical exchange of metal. It is set by the COMEX in New York, a futures market where banks trade paper contracts that claim to represent silver. The leverage in this market is absurd. For every 1 ounce of physical silver sitting in the registered vaults, there are often 100 to 500 ounces of paper silver traded. It is a game of musical chairs played with billions of dollars. As long as the music plays and nobody asks for the actual metal, the game continues. The banks can print infinite paper silver to suppress the price, keeping it artificially low. But the music is stopping. The registered inventory at the COMEX, the actual metal available for delivery, has collapsed. It has dropped from over 150 million ounces in 2020 to under 30 million ounces today. That is a 70% drain in just a few years. We are running on fumes. And here is the trap waiting for you. Most people try to invest in silver by buying an ETF, like SLV. They think they own metal. They don't. Read the fine print of the prospectus. If there is a shortage, the fund is not legally required to give you silver. They can invoke a force majeure clause and force a cash settlement. This means that when the crisis hits and silver goes to $500 an ounce on the black market, the ETF will close your position and pay you out in dollars at the last official paper price, say $50. You get your worthless paper money back, while the banks keep the real metal. This is the rug pull. When the physical market disconnects from the paper market, paper holders get slaughtered. This isn't theory. It happened with nickel in 2022. The London Metal Exchange literally canceled billions in trades to protect the banks who were short. They will do the exact same thing with silver. And that leads us to the final, terrifying phase of the lockdown. So, how does this end? It ends in phase 3, the price break. This is the moment the dam bursts. The physical shortage becomes so acute that industrial buyers, like Tesla or Samsung, panic. They stop looking at the COMEX price. They go directly to the mines and say, "I don't care what the screen says. I will pay double." Suddenly, the market bifurcates. You will turn on the news and see the official spot price is, say, $35. But when you go to your local coin shop or online dealer to buy a silver eagle, the price will be $70 or $100. Or worse, the buy button will simply be grayed out. This is called unobtainium. The price becomes irrelevant because the metal is unavailable. We have seen this movie before. In 2001, Russia delayed shipments of palladium. Ford Motor Company panicked because they needed it for catalytic converters. They bought huge amounts in a panic, driving the price from $300 to $1,000 virtually overnight. The paper shorts were annihilated. In 1980, the Hunt brothers tried to corner the silver market. They drove the price from $6 to $50. The exchanges panicked and changed the rules to destroy the Hunt brothers. But guess what? The people who held physical silver in their own safes didn't care about the exchange rules. They still held the wealth. This is the most important lesson of Phase 3. When the system breaks, the rules change to protect the banks, not you. They will halt trading. They will raise margin requirements. They will force cash settlements. The only people who survive Phase 3 are the ones holding the muddle, asset outside the system. I bet you know someone who checks the spot price on their phone every day and thinks that number is real. Do them a favor. Share this specific timestamp with them right now. They need to understand that the spot price is just the price of a paper promise. When the lockdown hits, that number will be a fiction. The real price is what you hold in your hand. And that brings us to the final question. What do you do right now, before the window closes forever? So, why is this crisis different from everything else we've survived? When we ran out of oil in the 70s, we found more. When we ran out of chips in 2021, we built factories. But with silver, there is no escape hatch. We can't print it. We can't easily recycle it. It's too small and scattered. And we can't mine more of it without mining more copper and zinc, which nobody wants right now. We are heading into a mathematical wall, mandated demand versus capped supply. And when we hit that wall, the only thing that matters is counterparty risk. If you own an ETF, your counterparty is a bank. If you own futures, your counterparty is an exchange. In a crisis, counterparties fail. They change the rules. They cash you out. The only position that has zero counterparty risk is physical metal in your own possession. When you hold the bar, you are the bank. Nobody can freeze it. Nobody can hack it. Nobody can cash settle it. The window to secure your position is closing. Right now, premiums are still reasonable. Inventory is still available. But once the headlines hit, once Tesla or Apple publicly admits they can't source metal, that window slams shut. You will be competing with millions of panicked investors for a dwindling supply of coins. This brings us back to our mission. We are tracking this lockdown in real time. We are watching the import data from India and the vault levels at the COMEX. And we have a goal. We are racing to hit 1,000 subscribers by December 31st, 2025. If we hit that number, I am going to release the killer video. This is the script I have already written that exposes the next phase. The government laws already on the books that allow them to confiscate strategic resources during a national emergency. I am genuinely afraid to upload it, but if we have 1,000 insiders, I will take the risk. Before I let you go, I want to talk to you directly, just you and me. I know this information is stressful. Realizing that the things we rely on, solar panels, electronics, the currency itself, are built on a fragile foundation can make you feel exposed. It feels safer to just ignore it and hope the experts figure it out. But you didn't click away. You watched until the end. That tells me you have the survivor's mindset. You understand that hope is not a strategy. The people who get crushed in these transitions are the ones who wait for permission to act. They wait for the TV to tell them it's time to buy. By then, it's always too late. You are early. You have the data. You see the pattern. That gives you an advantage that 99% of the population doesn't have. Don't waste it. Use this time to prepare, not out of fear, but out of confidence. Because when the panic starts, you won't be the one standing in line at the coin shop. You will be the one sitting at home, secure in the knowledge that you built your ark before the rain started. So, if you want to stay ahead of the crowd, if you want to know what the elites are doing while the rest of the world sleeps, hit that subscribe button. Join the insiders. The lockdown has begun. Make sure you are on the right side of the gate. Class dismissed.